Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2024 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small-cap companies with high-quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents. Our next presentation comes from Aprea Therapeutics, ticker symbol of APRE. That's Alpha, Papa, Romeo, and Echo on the NASDAQ. Presenting from the company today is its President and Chief Executive Officer, Dr. Oren Gilad. Today, Oren will deliver a brief presentation, and we will then engage in a fireside chat-like Q&A session. We will dive into the discussion in a moment. One final item, I want to remind everyone that Aprea is available for one-on-one meetings. If you've not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual. From there, you could click on the sign up for one-on-one meetings and proceed to register and make your one-on-one selections. With that said, let me now turn today's discussion over to Dr. Oren Gilad, President and CEO of Aprea Therapeutics. Welcome, Oren. Please proceed with your presentation.
Thank you, Adam. And we're very excited to share Aprea with your audience. And as mentioned, Aprea is traded on NASDAQ under the symbol APRE. And I'm going to make forward-looking statements, so please refer to our K and our Qs for a risk associated with it. So what do we do? What problem do we solve? Aprea is focusing on developing drugs for cancer. And Aprea is really set to overcome the toxicity that is associated with chemotherapy. We're all being touched by cancer, and we all know the side effects that the chemotherapy is having. So Aprea took on the mission to try and solve this problem. And we do it with personalized medicine by matching the drug with the disease. That's the approach that we're taking. It's personalized medicine and it's targeted therapy. So how do we do that? Aprea actually has two programs in the clinic currently, an ATR inhibitor and a WEE1 inhibitor. There's also a pipeline with an undisclosed target that we will share after we file the patent. And I'm going to walk you through the ATR and the WEE1. I also want to mention that Aprea is covered by 3 analysts from Wedbush, Wainwright, and Maxim, with a price target of $14 to $20. So, and I think that this can be a great opportunity for this audience to take advantage of the disconnect and the gap between the price that the stock is being traded at right now and the potential upside as guided by the analysts and their coverage. So please take a look at that and hopefully you take advantage of it. So where are the programs? I mentioned that 2 are in clinical development. The ATR is the one that is more advanced. It's the one that entered the clinic first. And you can see here at the top that it's in the dose escalation portion of the study. And we're going to provide updates in the second quarter of this year. These are, it's an open label, so we can provide updates as the trial progresses. The goal is to finish, and we're on track to finish it in the first half of next year, and then move to the dose expansion in the second half of 2025. Early this year, we did financing, which we're going to be talking about. It was a very successful financing with $60 million upfront. And in the financing, we said that we're going to get the IND cleared, not submitted, but cleared for the WEE1 in the first quarter of this year, and we did. We also said that we're going to enroll the first patient in the second quarter, which we did. And that gives you a flavor of what Aprea is very focusing on execution, and we do deliver on a promise. We're going to share updates from this study also the second half of this year. And the goal is to finish the dose escalation by the end of next year. Please, Aprea has a very strong team that has been working together for a long time. So please go on our website and take a look at the bios of the members of the team, as well as the board of directors. It's a very strong board of directors. And just to mention a couple of names, so Mike Grissinger here was the head of global licensing for J&J for over 30 years. And Jean-Pierre Bizarri, for example, that was also head of oncology for Celgene. And they're sitting on the board, and these are just names. Everybody is involved. You can call each and every one of them, and they know the company. So I'm going to start with the WEE1 and then move to the ATR, because the WEE1 has been in the news recently. It's a hot area that I think the audience is going to appreciate the differentiation and what Aprea did in order to solve the problem associated with other drugs that are currently in clinical development. So some background on the other molecules you see here on the left, AZD1775. This molecule used to be MK1775. It was found and developed originally by Merck, and then AstraZeneca licensed it. Merck put it on the shelf because it was toxic. AstraZeneca licensed it, and it's now back on the shelf because it's still toxic. And then you have a company like Zentalis. So if you look for differences in the molecule, please don't look any further other than the 5 o'clock portion of the molecule. So two carbon change in the molecule on the left, and that's what Zentalis is pushing in the clinic. And what we did when we first started this program, we identified liabilities associated with this molecule. And the first thing we did, we said, we got to stay away and develop a molecule that is selective. And that's one of the things I hope you're going to appreciate with Aprea, is that we do not cut corners. We do not cutting corners on the development of the molecules. We have been around for a very long time, and we are focusing on developing drugs that are selective, not dual inhibitors, but selective molecules. So the first goal for this molecule was to make sure that we're not inhibiting this family of kinases called PLK, PLK1, PLK2, and PLK3. And you see here the comparison to the Zentalis compound. Zentalis is getting IC50s in all of them under 100 nanomolar, where our molecule is way above that. So that was the first thing that we achieved. And when you look at the IC50 against the target here on the left, you see that it's about the same, 1.8. Ours is a little bit lower, but it's nothing, not a big significant change. But why is that important? It is important because PLK has been shown to be associated with sepsis. And Zentalis was a few months ago put on partial clinical hold because of sepsis. The other things that PLK is also doing, and please go and look at the full presentation on our website, is also potentially taken away from the WEE1 activity. So you take away from the WEE1 activity and you adding the risk for sepsis. And that's the two things that we hope that we achieved with our molecule. Our molecule is in the clinic and data is going to come. Obviously, we also want to make sure that we have preferred PK properties, and that's shown here. So at 10 mg per kg per day, we're getting an AUC target coverage of about 17,000. Zentalis has to go 4 times higher to receive the same level of inhibition. And of course, you want to show that this molecule works as single agent. This is an oral administration of our drug on the daily basis. And you see the purple line here, which pretty much keep the tumor flat. So where are we with this stuff, with this molecule? Where are we with this clinical development? The study has 2 portions. You see it at the bottom here, it's the accelerated titration. And then we're going to move to the Boeing design. So we last disclosed that we're enrolling in dose level 2. When we did do the financing early this year, we said we're going to complete the accelerated titration by the end of the year. And it looks like we may be ahead of schedule with this portion of the study. And then from there, we're going to move to the Boeing design. And as you see here at the bottom right of this table, these are the biomarkers. Remember, we talked about personalized medicine, targeted therapy. These are the patients that carry these mutations are being enrolled on our study. And also know the KRAS and P53 instead of KRAS or P53. That's another patient population that we are targeting. So that's the matching of the drug with the mutations. Again, this is not chemotherapy. This is targeted therapy. This is personalized medicine. Only patients with these mutations can be enrolled on our trial. And we will continue to update as the trial progresses, as mentioned by the end of the year. The ATR, you're going to hear a very similar story that we did. And with the ATR, it's actually, we have a very distinct molecule. This molecule is a microcyclic foundation. The reason we went with a microcycle is because of rapamycin and mTOR. So ATR, ATM, DNA-PK, mTOR, those are the same family members. And rapamycin is the inhibitor for mTOR. It's a natural product. So our thought was that if nature already selected microcycle to inhibit a family member of this PIKK, then we should be developing a microcycle for ATR. And by doing that, we can potentially increase selectivity, improve tolerability. And when you improve tolerability, you get more efficacious dosing. And so far, that's what we're seeing. It's a good translation from the preclinical study to the clinic. Again, what you're going to see here is that we did not make another analog. We're not making analogs. We are developing our own drugs. And all of the drugs that I'm going to be talking about today have been developed in-house. So similar story here. AstraZeneca acquired Kudos. There was a PARP inhibitor. PARP is synthetic lethal with BRCA loss of function. So there is actually commercialization validation to the approach. And in that portfolio, there was an ATR inhibitor. Bayer made an analog of the AstraZeneca compound. This analog has been shown to be the least selective and most toxic, currently put on the shelf. And Repair made an analog of the analog, and this is currently in clinical study. Remember that we did not make analog. We made a microcycle, and as you see here at the bottom, we are, of all of the molecules I talked about, we are the only ones that are treating on a daily basis. Patients on our trial taking our drug orally every day. And it's important because when you treat for 3 days and then you withdraw the drug for 4 days, it doesn't help, right? Because tumor grows. And when the tumor grows, cells have to proliferate, which means that DNA has to replicate. And in order to make sure that you put constant pressure on the target, you have to treat it every day, because if we're calculating average of 1 cell cycle per day, not having the drug for 4 days doesn't help. Something with antibiotics, right? When we go to the doctor and we get antibiotics, it tells you take it twice a day for 7 days or 10 days. Don't miss a dose, because you want to make sure that the drug is always in the system and the bacteria cannot grow. Same thing here, drug always in the system, and you put constant pressure on the tumor. So we disclosed and we shared that we are in dose level 6. The drug is being well tolerated. So we actually went to the FDA and we asked to increase the dose to 1100 and 1300. We also disclosed that we are exploring a potential BID, so meaning twice daily. And that's to make sure that we get a longer coverage on the target. And you see here on the right, the indication, colorectal, prostate, gastric, endometrial. So we're going after, with both programs, after solid tumors. And here we did not disclose the biomarker, but it came from our platform called RepliBio. You see here that we do have a good correlation exposure with dosing. So the drug is getting into the system. We're now at the minimal efficacious dose, so we should start hopefully see more activity. But we already saw a couple of stable diseases, not partial response, not complete response, but stable disease. And what was nice, for example, with the patient, so every line is a patient, and the X is the days, and the Y's are the patient identification. So you can see here, for example, this patient has been on the drug for 196 days. And these are late stage patients that have metastatic disease. And what's nice about these 2 stable diseases is that they actually were correlated with mutations that we predicted to have sensitivity to our ATR inhibitor. But we did not expect to see that long of a duration from this patient. And then if you look at the adverse effect here, and again, please go on and look at the full presentation on our website. You see that we're not seeing grade 4, and all of the adverse effects are being well tolerated. Quickly on the IP, before we move to the Q&A and talk about the financials. So all of the drugs that I talked about today, everything has been developed in-house. And because we're the only ones that making microcycle for ATR, you can see that it's a very extensive IP protection that we have, that we want also being protected. And once the third program is going to be, the patent is going to be filed, we will share the name of the target. So just quickly on the cash and cash equivalents, as of June 30th, in the last reports, we disclosed $28.7 million on the balance sheet, talked about the last financing that we did. And I think with that, Adam, I'm going to hand it back to you for the next portion of the Q&A. And thank you.
Okay, great. Thank you, Oren. So to start off here, can you tell us something a little bit about yourself, your background, and how you got to Aprea Therapeutics?
Yes, happy to do so. So my background is actually the science. I was the person who published the paper to show that ATR is a good target for cancer therapy. It was when I was at Penn. And I think that the audience here may appreciate this study because it was a very elegant study that for the first time showed that ATR can be a good target. And the study was had 4 groups in it. It was control cells and control cells with ATR being reduced. So there was no drug back then. And then cancer cell and cancer cell with ATR being reduced. So really 4 groups. The first group, the control cells were fine. Control cells with ATR reduced, also fine, healthy and happy. Cancer cell, obviously alive, but cancer cell with ATR reduced were all dead. And that was the aha moment. That's where we realized that, okay, we have something potentially real here. And that's what got the formation of the private company called Atrium. Aprea went public in 2019 with a p53 reactivator. And then when Aprea trial came short, Aprea did a very extensive due diligence and identified Atrium and then the pipeline that Atrium can bring to enhance the current Aprea pipeline. So Aprea moved from a binary event on just p53 to now have an extensive pipeline with an ATR, WEE1, undisclosed, and platform. And we're excited about the future to come.
Can you discuss the topic of targeted therapies for cancer and why that is the wave of the future?
Yes. So chemotherapy, as I mentioned in the beginning, it kills every dividing cell. That's where we see all of the side effects, right? Mm-hmm. Targeted therapy, you're matching the drug with the disease, with the mutation. I mentioned PARP and BRCA and BRCA. So PARP is the first targeted in our field, in the field of synthetic lethality and DNA damage and response. PARP is the first to be clinically and commercially validated. So the approach works. Now we're looking for the part. Is it ATR synthetic lethal with ATM loss of function? We want synthetic lethal with cyclin E overexpression. And there are other companies that are working on other targets with the same exact approach, but targeting different patient population and different diseases. So there's lots of promise for this way of treatment.
So that leads into my next question. I was just going to discuss with you, are there some comparable technologies or products to what Aprea is working on that's currently being used in the marketplace? And how will Aprea be different or better? And then can Aprea's technologies be combined with some therapies that are currently being used in the marketplace and improve upon them?
Yes, so PARP, and that's the first approved. Actually, the comps that we have, I'm going to mention one company, IDEA. They're
Mhm.
valued at over $3 billion in market cap, and they're going after different targets. Given the mechanism of action, our drug, the ATR and the WEE1, they can be combined. They can be combined with radiopharmaceuticals, they can be combined with chemotherapy, they can be combined with immuno-oncology, they can be combined with other target therapies. What's nice about Aprea's pipeline, and I mentioned the ATR and the side effects, is that it is a clean compound. We don't see anemia with the ATR, we do not see neutropenia, we do not see hematological toxicities. So when you go for combination therapy, you don't want to have two drugs that having overlapping toxicities because
Mhm.
it's going to make it worse. So having a clean compound with a clean safety profile, our ATR can potentially be the preferred ATR inhibitor for combination therapy. And again, because of the mechanism of action, you can combine it with many other targeted therapy that we have shown and we're still also still exploring.
So this slide that's up here, the company, Aprea is currently valued less than its cash position. Just wanted to confirm that's correct. And how much runway does your current cash position provide? And then also maybe can you discuss the details on the warrants? When do they convert? What price and what type of capital that could potentially provide the company?
Yes, so there are lots of components in this question. I'm going
I'm happy to repeat if you forget, no worries.
yeah. The first on the warrants because it's here, right? So we did. I mentioned we did the 16 million. That was cash. The runway is gonna be disclosed fourth quarter of next year, and I can go back to the slide that we have the milestone inflection points that should be taking us into the dose expansion of the ATR and complete the dose escalation of the WEE1 with multiple inflection points. And hopefully the audience here will see the the potential and come the day before, and take a position early before the upside. Correct. We are value way below our cash. You can see cash position here, and the market cap of the company is way below that. So there's gap in that. There's also gap. I mentioned the analysts that are covering the company and the price target that they put on the company. So there is a potential upside. I mean, based on if you take the average price target between the three analysts, we're looking at, call it $15, $16 price target. So if the stock is now being traded at $3, even if we just double, we got to 6, people can double their money, right? If we got to 9, triple their money. So there's potential for upside here. As far as the warrants, so we actually had two half warrants. Tranche A, we have to reach the RP2D for the ATR and double the price share, and that's another thing that I'm going to mention. The last round, we brought in a very sophisticated group of investors, institutional investors. They came at 729.
Mhm.
And so is management. I also participated in every round, including the last round. So the last round was at 729,
Mhm.
and the stock has to double. Tranche B, it's another half. So tranche A can bring another $8 million. Tranche B is another half a warrant with 25% premium. Well, that's the RP2D of the WEE1 plus not just doubling, but 25% higher. And it can bring another 10 million. So there's potential of 18 million coming from the two half warrants, a total of up to $34 million, the 16 upfront plus the 18 from the warrants.
Great, thank you. The next question was, and maybe we want to flip back to that slide that's up to you, but maybe it's worthwhile to review and discuss some of the key catalysts that investors should be on the lookout in the coming quarters.
Yes, right here. So
Gary.
Yeah. So both the ATR and the WE1, they're open label studies. So we're going to provide updates along the way. The next set of updates to be provided in second half of this year before the end of the year. Hopefully, we're going to start seeing some signs of efficacy, but the RP2D for the first program, the ATR, that's going to come in the first half of next year. And then the dose escalation of the WE1, that's also going to come up later next year. So there's going to be some news related to the clinical programs as well as the preclinical when we get the undisclosed program advanced into target identification and IND studies.
So, Oren, just to conclude, is there anything else you'd like to add before we finish the discussion? Anything, parting messages that you'd like to share with investors?
Yeah, I think just reiterating the message that I think your audience hopefully will take advantage of the disconnect here and see the potential, the upside potential of the Aprea. Aprea has cash in the bank. We're in an area that is hot, synthetic lethality, targeted therapy, DNA damage and response. Our comps are valued at much higher valuation. And those who may come the day before, come now, could potentially get some good return on their investors. And hopefully next year we will talk about the different valuation of Aprea when we come and update again. Because yeah, so I'm excited and thank you for having us, and thank you for letting us share Aprea with your audience.
You're welcome. Thank you, Oren, for your time as well. We greatly appreciate it. To anyone out there who's not signed up already for a one-on-one, again, please send me an email at lowensteiner@lythampartners.com, or again, visit lythampartners.com/virtual and click on the sign up for one-on-one meetings button to register. We hope you all enjoy the rest of the conference and have a great day. Thank you very much.